So welcome to the webinar. As you know, in this webinar series, we introduce some of the books we have chosen to be in our book list. Today, we have Jarratt Davis with us. In just a few minutes, he'll be talking a bit more about his book and answering your questions as well. The book is titled How to Trade a Currency Fund. In a nutshell, the book is easy to read. It is straight to the point. It is inspirational. It's packed with genuine revelations from someone who has dealt with a lot of aspiring traders and also a lot of so-called professionals in this industry. And this makes the read not only exciting, but also an eye-opening for many people. Besides, it contains a lot of references to other useful sources of information, as you'll probably see in this presentation today. The author goes through his own history in the trading world and leaves the reader with a step-by-step roadmap on how to become a successful money manager. This is in line, by the way, with some recent webinars held here at FXStreet by different authors on how to professionalize yourself in the Forex trading industry as a money manager. We noticed a growing interest coming from a not too small elite of traders who have endured the first years of learning how to trade and now are ready to take the next step and become either money managers or analysts or system developers and so on. It's about professionalizing yourself in this industry. In this sense, this is a book for those wanting to arrange a trading career plan, and I stress the word career. It goes beyond what we usually heard about a trading plan. It's really about a trading career plan. Many reviews of this book you can find in the internet speak about how reading it changed the way of thinking about trading and how it provided clues as to what is the right direction to follow. For someone who has been trading for some years now, I never get tired of listening that trading is not a get-rich-quick scheme, and that leverage can be a dangerous thing if it's not properly understood, and that money management is therefore one of the keys to success. But at the same time, for someone who has never traded in a professional environment, and I think most of us listening here are in this position, it's highly interesting to know how things work on that side of the market. Practical explanations of such terms as liquidity, spreads, slippage are given throughout the book so that you understand what kind of trading style we have to adopt in our personal accounts if you want to replicate that performance on an institutional level. Okay, without much further delay, let's welcome Jarratt Davis to the room. I will pass now the microphone over to you. Thank you. I will then wrap up the session at the end. Thank you.
Okay, guys, thanks for that. Thank you very much for that. So what I'm going to do is basically I've just got a little presentation prepared. What I thought I would do is just take you guys through just the key points of the book, basically. So if you are looking to trade, if you are looking to become a professional money manager, if you're a retail trader and you're thinking to yourself that you need to, you've got no chance of doing that unless you work in a bank or whatever, I'm going to show you there are steps you can take to get yourself to that level, because those are the steps I took. So let me just get this screen share going. And all I've done is I've just prepared a simple PowerPoint presentation, basically, to keep it simple. So let me just get onto this. So you should be able to see this little base, just a little points here. Let me just get the chat box here so I can see. And what we'll do is I guess I'll finish the presentation and I'll hand back over, and then we can do Q&A maybe or something like that. So as you can see, first of all, I thought it was a good idea to go into who I am, what I do. And there's a reason for that, which we'll go through. So the main reason is at the top there, because I began as a self-taught retail trader. So that's the key point. So I'm not some guy who's working at Morgan Stanley or Goldman Sachs or whatever, talking about how to become a fund manager. I basically started out as a retail trader, just trying to learn how to trade Forex for myself, basically. And I started that journey in 2000, well, really, really basically at the end of 2005. And my goal, you can see there, my goal was to live purely off my own account. So basically, I wanted to have a trading account there that I could trade and live off, but at the same time grow so that, as it was growing, my income got bigger, of course. If I was making, I don't know, 2% a month, that 2% would be worth more and more as the account grew, until eventually my income was, far exceeded what I needed, etc. And I could build myself a very nice business. And it was just me and my trading account. That's the goal. And I think that's a goal that a lot of people share. And in order to do that, I very quickly realized, basically, this isn't a get rich quick scheme. That's the theme of the book. This isn't something you can take and get rich quick. You can get rich quick. You can use leverage. You can double your account very quickly, triple it, quadruple it. You can do it 5 or 10 times. But if you continue using that kind of risk, eventually that account will get blown up and you'll be back to square one. That's the point. So it's just a very frustrating circular cycle. Okay. So trading without leverage, and one of the main reasons for that is the psychological aspects, which again I talk about in the book. When you're trading big size and you've got massive amounts of your account at risk, it just affects the way you trade. So maybe, if you were trading very low leverage, you'd hold a position, even if it's going against you because you've got good conviction. But then if you're using really high leverage, and the more that price goes against you, the bigger a chunk of a trading account it takes, the more it hurts you. So until eventually you can't take the pain anymore, so you just cut the loss. When in the end, the trade ends up winning. That's happened to me numerous times, and it's because of leverage. So it's not just about skill, it's about psychology. And again, the book talks about that. That's what I go into. Psychology is a big part. So I very quickly realized that it wasn't just going to be able to put $100 into my account and keep doubling it every month, until I was a billionaire, basically. It doesn't work like that. And it's purely because of the psychological. When you're trading small money, you can do that. You can double your account. You can make spectacular returns. But the more money you have in there, the more the psychology gets to you. And eventually everybody hits a point where they're like, well, it becomes a different game. So I very quickly realized that leverage wasn't the road to go down for me in order to get to that goal. So I needed other sources of income to kind of leverage that skill of being able to trade. Once I'd mastered the art of trading, what can I do to leverage that skill, but while keeping my focus on trading my account? And obviously managing other people's money was the obvious step. Okay. So if I'm trading, 100,000 of my own money, and then I'm trading $1 million of clients' money, I'm leveraging my own money 10 to 1. Okay. And then I can take a percentage of those profits, etc. And all those money I can put back into my trading account and keep growing like that. It would just get me there much quicker. That was the whole point. So I did that. That was my goal. And I took the steps. And this is just a very brief overview of what I did and where I am. I started trading my first fund, which is the WealthbuilderFX fund, which is based in Hong Kong. That was in 2008. They brought me on board. Within 6 months, I was the head of trading there based on my performance. That was a very eye-opening experience. Again, I'll go through that whole experience in the book. I met some very interesting people, professional traders. I learned a lot about so-called professional traders and how, that doesn't mean anything, basically, in this industry. That was a massively eye-opening experience. I left that fund in 2010 to focus on my own thing. And then I joined Smart Global Management in 2012, which is where I currently am. And that's a company, that's FCA regulated in London, based in the city. We're one of the only firms around to actually offer regulated managed accounts in its purest form. Okay, so we're not a fund. We're not anything like that. We are a managed account investment company. And we focus on that, but we are FCA regulated, which is a rare thing. So you've got lots of managed account companies around, will do managed accounts, but very few of them are regulated. Okay, so that's the key thing about that. So I'm doing that now in the city. The other unique thing about me really in this space is that all my returns are fully audited and verified over a 5-year period. So I've basically beat the market every year since 2008 to 2009, and that's verified. And the book, just going into the book again, is my story, is my whole story from that starting point of that goal in 2006 to achieving what I've achieved up to this point. But it also gives you the steps that I took and how, most importantly, how you can take those same steps. So like was mentioned earlier, it gives you references, it gives you, exact information that you can then take and follow in the same way. And it also teaches you the lessons. So I also throw in the mistakes I made, the eye-opening experience that I had. This industry is not what you think it is at the top professional level. I can guarantee you that. And that's something I really discovered and was very, very shocked in sometimes with how unprofessional professional traders are, if that makes sense. So that's the story. That's who I am. And that's really one of the reasons why the book is probably pertinent and kind of useful to you if you are a retail trader with the same goal, because that's where I started from. That's the reason why I think the book, that's why I wrote the book and why I think it would appeal so much to retail traders. So if we go to the next point here, what we're going to do is we're going to go through some key points from the book, just as an overview, so you can get a taste of what the book's about. The first real key thing when you're starting this journey, this is the benefit of reading the book, really, is you get this at the beginning. I had to learn this all the way through. So I made all mistakes. I made, half of these lessons that I learned because I didn't do them properly, basically, and it cost me in the long run. So broker selection. This is what we're going to go through first of all. This is one of the key. There's, I think, 3 or 4 real key things that you need to be planning way ahead of time if you're thinking about going into fund management and becoming trading for clients. Broker selection is the primary one. You have to select your broker properly. So first of all, we've got at the top, you've got good trading conditions, and that means regulation. It means a trustworthy broker. Okay, don't trade a broker just because it's easy to set an account up and you can fund with your credit card or something ridiculous like that. What you need to select from a broker are good conditions, and what those good conditions are, and we talk about these in the book and how you can find them, and I even suggest some brokers in there, are, first of all, they have to be based in a country that you trust. That's absolutely vital. And what I mean by that is generally your home country. Okay, so the country that you live in is a country that you trust, and the reason for that is because if anything goes wrong, it's very simple. It's a very simple process generally for you to kind of get some kind of recourse or take some kind of legal action against a company or a broker within your home country, because you understand the laws. It's generally much easier. However, if you live in a country that you don't trust, if you live in a country with maybe no financial regulation or very kind of weak financial regulation that you do not trust, then use a country that you do trust. So, for example, a first world country, the UK, the US, Europe, Australia, those kind of areas where I've got really good financial regulation. Regulatory bodies. And then the second thing is make sure that they are actually regulated. So if you've got a broker based in the UK, that doesn't mean anything unless they're regulated. Okay? The regulation is the extra layer of protection because they've paid and they've put all their resources and effort into becoming regulated. So they need to then adhere to that regulation and they're monitored by that regulatory body. Now, of course, nothing is guaranteed. Regulated entities go bankrupt and bust all the time. It's not designed to protect you against the business going out of business. It's designed to protect you against the company who is in this business for the wrong reasons. A scam, basically. Okay, it's just an extra layer. There's nothing guaranteed, but it's just an extra layer of protection. And for example, if you're based in the UK or the US or Europe, there are regulatory protections. So in the UK, for instance, your money is protected up to £50,000. So if you've got £50,000 in a broker, and it does go bust or something happens, you'll get that money back, okay, from the government almost, from the regulatory body. They'll guarantee your money up to a certain amount. So it sounds simple, but the amount of retail traders, the amount of traders I have emailing me sometimes or talking to when I meet them at various events, and they say they've had their money stolen, they put their money in a broker, they couldn't get it out, and they're investing in brokers that aren't regulated based on, little islands that no one's ever heard of off the coast of Africa, all this stuff. And it's like, it's that, for me, it sounds obvious, but it's not that obvious because so many people are making this mistake. Just make sure you get a good broker with good trading conditions. The final thing is just check the review sites. There's plenty of review sites on the internet. Okay. Make sure you read what everyone else, all the people that are existing customers are saying about them. Okay, and if they pass all those tests and they've got good conditions, you're good to go. Basically, it's fine. That's a good broker. It doesn't guarantee you against losing your money. You know, if that broker goes out of business, you're not guaranteed, but it's the best you're going to get, the best conditions you're going to get. Now, the next most important thing about selecting the broker, this comes later on, and this could kind of be forgiven for people not thinking about, because people tend to think about quite short term. And this is something I was guilty of. Brokers are absolutely fantastic for making important introductions later on. If you've got a good track record of success with a broker, they'll be watching you, okay? And we'll go into this in a moment, but they can introduce you to money managers, okay? One of the way I was introduced to Smile, who I trade through now, okay, was through a broker. I was having a chat with my broker one day. You know, I just left Wealth Builder. I was trading my own money at the broker. They were, you know, they knew I was a profitable trader, and I was chatting away, and you know, we were talking about getting regulated by the FCA, etc. And he said, you know what? There's a money manager that we know. There's a company, investment company that I'm aware of, looking to take on traders and work with them, and you know, etc., etc. Introduce clients, etc. And that's how I was introduced, through my broker. So your broker will offer at some point important introductions if you get the right one. It can introduce you to clients, and most importantly, IBs, because an IB is a money introducer in itself. An IB's job is to match clients with traders. And brokers, of course, if an IB is bringing clients to traders, they're also bringing those clients to the broker, because that's where you have to have a brokerage account to have a managed account. Okay, so the IB has all the connections, and the broker very often will know a raft of IBs. Okay, so when you selecting your broker, have that conversation. We'll look at this in more detail in a moment, but you need a broker that's going to be able to make those kind of introductions later on. Now, a broker will never be able to say, you know, Mr. Client, look, this is the Mr. Trader, we'll do an introduction. It's never that direct. But in the real world, you know, they can say something along the lines of, you know what, we can't make a direct introduction, but if you come to this Forex Expo event or this convention next week, we're going to be there, and we know that some very good traders are going to be there. Maybe you'll meet them there. You know, that's how it works in the real world. So there's no official introduction, but brokers are very, very good for getting your business off the ground. So the other thing, we're going to go to the next thing now, is the ability to host your managed account business. Again, if you use a cheap, low-cost, unregulated new broker, there are benefits to that in the beginning, possibly, but as you build your business, you need them to be able to have the ability to host a managed account business. And that means having the infrastructure in place, having the correct trading platforms. We've got MAM accounts, PAM accounts, all that stuff that you can use to trade multiple client accounts. If you've got clients with euros, pounds, dollars, Swiss francs, Japanese yen, how do you trade all those through one host account? It's a question you might not think of, but it's a massive headache when you get in that situation and your broker, you know, you've got to end up trading like 4 or 5 different accounts at the same time because they're in different currencies and your broker can't host them. Okay. Or, you know, how do you go about getting your fees? If the broker's not interested in, you know, doing, you know, what's the word I'm looking for? If the broker's not interested in kind of managing the fee process, at the end of the month, you've made a profit. The broker takes that profit from your account and then sends you your percentage. It's all done automatically at the end of each month. If the broker doesn't do that, then you've got to do, how are you going to do that? It's a massive headache. You want to be focused on trade. You don't want to have to then set up a whole back office to invoice clients for money. Then the clients have got to take the money out. It's an absolute massive nightmare. Okay. So that's all these things. You need to make sure that they can effectively host the managed accounts business. Okay. So you need to find out all that at the beginning. Of course, competitive pricing is important once you are professional. When you're a retail trader, brokers, you're going to find it very difficult to find a broker who will give you really good pricing. But once you've got, you know, a few million under management, brokers will be competing for your business. So you want the best price available. So you just want to make sure that you get competitive pricing. Okay. And basically, in a nutshell, the book points out all the brokers that I've used, the good ones, the bad ones, what was good about them, what was bad about them, and how you can go about selecting a perfect broker. Lots of steps. Okay. Now, just for anyone coming late, all we've discussed so far is everything on this slide. We've discussed broker selection and the importance of getting the right broker from the very start if your goal is to become a money manager. Okay. So that's the first thing. Broker selection. And that gets overlooked by a lot of people, but it's absolutely critical. Okay. So that's the first thing. And the book obviously goes, there's a whole section really, chapter or a couple of chapters dedicated to brokers and the benefits and negatives of brokers and how to select the right ones, etc. So that's the first key point from the book that I go through. The second key point, or the key theme of the book, so it's my story from the start to the end. It's my personal story and my personal experiences, but there's also lessons along the way. And the second key theme of the book is the track record. Okay, it's absolutely crucial. This is the biggest one that I failed on. Okay, and it's not because I'm an idiot. It's because I didn't think, because you just don't appreciate where you're going to be. Well, I'm in that position now, and I'm looking back. And if you're starting out, please, if you want to do yourself a massive favor, listen to this one key point. The emphasis you place on your track record will be the defining factor in how quickly you build your business and how quickly you go from 0 to millions under management, honestly. Okay. So the first point there is build a record in one place. This is the absolute essential point. My mistake was that I built records I was trading for different clients at different brokers. And that's partly because I would have taken anything I could get. You know, if a client came to me with 10,000, I'll take it, of course. If a client came to me with 100,000, but he wanted to trade at a different broker, I'm not going to turn him away. That's just the reality of life at the bottom, basically. And I did that, and I built different accounts I traded different accounts with different brokers. And the other mistake I made is I traded different leverage with different brokers. In the beginning, I was trading quite high leverage with some brokers because the client wanted it. And I wasn't going to tell them what to do because I'd rather have the money to trade. So you end up getting a completely uneven track record. And then the problem you've got then is only some brokers or some clients will let you get their accounts audited. Okay. Because another thing is you've got all sorts of different clients, and again, in the reality of the situation, a lot of people have got accounts that the taxman doesn't know about, and they're trying to keep that away from that. So the last thing they want is their account being publicly opened up. That's just the reality. And then you've got other problems like entrepreneurs with 100,000, 200,000, 500,000. They're always moving money around. So I had one client who was constantly taking money out to build a house, and then he'd put it back, and then he'd build it out to buy a helicopter. It was a nightmare. But that was where I was. I had no other option but to trade for him because I didn't have any other clients. He was my starting point. Those kind of clients are my starting point. Okay. But the key is build a record in one place if you can. Okay. And that leads us on to the next point, because you need to get it verified by independent, multiple external sources. That's the key. And that gives you the credibility. Okay. So you need clients coming on board that will let you use their account. Because if the problem with managed accounts is you can't just get a managed account audited because it's not your money. Okay. The benefit to the client is the client can hold the account in their name. It's very transparent, etc. But the negatives for a trader are it's not your money. It's not your account. You can't just go around getting someone else's account audited. The client has to actively get that account audited and then allow you to share those results. That is a nightmare in itself. That's another thing to put into your conversations at the beginning with the new clients. Are you going to allow me to get this account audited? Okay. If not, is there a deal we can do, maybe on the fees or whatever, to allow to have that permission? Because the verification is crucial for getting more money down the road. Okay. It's like steps, like building a snowball. You start with a little snowball and then you get bigger and bigger and bigger, but you don't just go from a little snowball to a giant boulder of a snowball. You kind of a process. And that's the same with getting clients. You don't just get institutional clients or hedge funds from straight away. You have to start at the bottom with all sorts of different clients. You meet all sorts of different people. But to keep that snowball rolling and growing, it's very important that as you go, all your results are verified. Okay. And this is something I had problems with as well. Because because I didn't build a record in one place, because I didn't have this conversation, some clients would leave, some clients wouldn't let me. And I ended up having audits on different accounts. So one year, maybe for 2 years, I was one client, and then he'd leave. So then I'd have to go to another client and get that account audited for the next year. It's just an absolute headache, basically. So that's a real key conversation, because the audit's going to come in very important later on. Then you need to, going back to the broker, you need to discuss your intentions with the broker. This helps because you need to say to the broker, look, I'm coming on board, I'll trade with you, but my intention is to build a track record that we can then somehow promote, and have the conversation, see what they say. And when they're watching you, that's a very good start. Okay, the broker themselves, very, very rarely, the broker will be one of the sources that will verify your results for you. They'll provide a letter of verification. Not all the time. In fact, most of the time they won't, but some brokers will. Again, the book kind of goes into more detail about how you can get that, how you can kind of, the right things to say to the brokers to get that from them. Because, if the broker's verifying track record, that's a massive credibility to your clients. Okay. Then you need to market that track record to potential investors. Okay. That's what you need to do. If you're the best trader in the world, but no one knows about it, that's, pointless. So your focus needs to be on trading, but your secondary focus needs to be on marketing, creating an image, okay, creating credibility. What image does your client expect to see from a successful trader? Again, the book goes into all that. We're going to look at that more in the next slide, on the final slide, but that's a really, really important thing to bear in mind, okay? You need to be getting out there, marketing it, showing it to everyone. The next point, again, this is absolutely something I didn't do. This is something I failed in the first 2 or 3 years, is you need to select consistency over gains. In my head, I was thinking, if I can do 20% a month, then that's going to be good. Everyone will love me. That is not the case. When you build that snowball up to better quality clients, they know better than to invest in someone making 30% a month. Because if you can make 30% a month, you can lose 30% a month. And that's true, because you have to use leverage to do that. You have to take the risk. And clients with big money who are looking for an alternative investment, they're not looking for 30% a month. They're looking for 30% a year at the absolute most. Most high net worth individuals, most professional institutional clients will be absolutely over the moon with 12, 13, 14, 15% after fees. That's an incredibly good return for those clients. And that's what they're programmed as an institutional investor. That's what they're programmed to look for. So when you come to them with 200% a year, which I did in my first couple of years, you get immediately overlooked because you're obviously just a cowboy or you take too much risk. And that held me back for a long time. Okay. So I learned that a client would absolutely love 1%, 2%, 3% a month, very consistently, very steadily, way more than high gains with high risk. 100%. I can 100% promise you that. Now, again, at the lower end of the client, the lower end of the kind of echelons of client society, you're going to get plenty of clients that would love 30% a month, plenty. But those clients are the worst type of clients. They're the clients that will always be pulling their money in and out. They're the clients that will always be on the phone, always asking questions, always hassling you, always pressuring you. If you're in a bad trade, they'll always be saying, why did you buy it instead of sell it? It's just a nightmare. Trust me. Those clients are not what you want to move away from those clients as quickly as you can. But I accept that you need them in the beginning, but as quickly as you can, move away from that. And the only way you're going to do that is you have consistent profits over radically high profits. Okay. The final point, again, is very important, is at all times you need to be trading your own money. Again, this goes back to credibility. One of the key selling points of my managed accounts is that for every pound that my client loses, I've lost. Okay. So if the client loses all their money, if I wipe out their account, I've just wiped out all my money. Okay. And there is something credible about that, because that basically I'm never going to let that happen effectively. There's absolutely no way that I'm going to allow all my money to be wiped out under any circumstances, not even 30 or 20% of my money. Okay. No way. Because my goal is to make a nice, consistent living from my account. Okay. Can you imagine if I get to a point when I've got a few million in my trading account, like 5, 10 million in my own personal trading account, and then literally 1 month I wipe out half my money, or then I wipe out my entire account. You're just never ever going to let yourself get to that situation, because I've worked too hard to just wipe it out with something like that. Okay. And that feeds confidence into the client, and it actually helps you convert clients much better. So that's a big selling point. So in the beginning, you probably are going to be trading your own money, but never, ever lose sight of the power of trading your own money alongside your client's money. Okay, that's a big selling point. For every pound they lose, you lose. So you're in this together, and then you'll find they're much more comfortable with the risk associated. So that's another key point there. Again, massive theme of the book is your track record and the importance of getting that right. And then we'll look at the final thing now, is actually finding clients. This is another big theme of the book. This is the final theme we're going to go over. Once everything is in place, finding clients is the easiest part. Honestly, clients will find you, right? Because like I said, we'll go through it in a moment, but clients will find you. You'll find clients, no problem. And you might be sitting there scratching your head thinking, how? But honestly, the one thing I've never struggled with is finding clients. Okay, once I got my track record down and I started marketing it and getting the word out there, you don't have to worry about that. But there are a few key things you have to be aware of when you're going through the process of finding clients. And if you can put them into place now, you have a much easier time. So first of all, where do you find clients? Well, first of all, the brokers, we've talked about this. The brokers will produce lots of introductions that you can find very, very useful. IBs, there's lots of IBs buzzing around. You can find them online, you can find them through your broker, all sorts of ways you can connect with IBs. These guys, that's their whole job, is to introduce money. That's, they will provide you with a flood of money if you provide them the right trading conditions. Friends and family, the amount of times I've got friends and family putting money in all the time because they want to invest. IFAs, which is financial advisors in the UK. Mainstream financial advisors, again, not all of them, because some of them aren't regulated to offer this kind of product. But if you're regulated and you've got the credibility, IFAs will be loving it. They'll be promoting you as well. And there's lots of those. You can literally find those just by looking down the high street, really, Googling, financial advisors in your area. That's just an easy way. Because if you've got wealth, if you've got money, where do you go? The first thing you work for a lot of people is to go to a financial advisor and get some advice. So that, again, very good source. And of course, online portals. Now, again, this is before, when I started trading, these things didn't exist. But things like MyFX Book, things like currency, you've got all these Zulu trading, you know the ones I'm talking about, these copying portals, trade copiers, basically, social trading. Brokers do it. All sorts of brokers have their own trade copier portals. All those are a way to market your strategy and find clients. Okay. That's the easiest part. So many different ways to find clients. And again, the book goes through, it's a whole chapter dedicated to how to find clients step by step, all the mistakes I made when doing that, all the things I did right, and everything looking back. We'll go to the thing, one of the key points. Building credibility is the key to success. And I mentioned this in the book. If you're going to meet a client, if you turn up dressed shabbily on the bus, dirty, with scruffy hair, the client's very unlikely to invest because they have an image in their head of a successful currency trader. Now, even if you're not making millions, which you won't be, okay, there'll be a couple of years where you're actually struggling to make a living from that. Just because you're at that stage, clients will do you, they'll say, well, I'm not paying this much, I'll pay you 15% or I'll pay you 10% performance fee. And just to get the track record, you'll take it. Or just to trade, 100,000 or 200,000, you'll take it. So you get all sorts of reasons why you won't be making much money in the beginning, but it's important to maintain credibility, okay, and have a certain image of what your clients will expect to see, and a website, literature. Someone asks for performance, you don't send them a spreadsheet, send them a nicely formatted fact sheet with all your details, etc. FCA regulation or regulation in the country that you're trading from, again, is a massive one. Offshore regulation is possible. Again, I'll go into all the different things. We'll go into that in a moment. The reason for regulation is regulation protects you and the client. If you're trading for a client, and again, this is a lesson I learned. I wasn't regulated and I was trading for someone else, okay? And I almost got sued because I lost that guy money, okay? Again, the whole story's in the book. It's a ridiculous, the guy's an idiot. It was a ridiculous story. But fundamentally, he was going to take me to court. He was going to sue me. And that was a very stressful time for me. He wouldn't have won because, if you read the book, you'll see why. He would never have won. He was just being an idiot. But if you're regulated, you're then authorized to trade the money. And the deal is As long as you're trading money with genuine intentions, if you lose money in the markets, that's just the way it goes. The client can't come back and say, I want my money back, or, blah, blah, blah. That's just the way it goes. The regulator will protect you. The regulator only steps in against you if you're clearly trading against the client. You're trading with a view, you don't care if the client loses money as long as you make money, that kind of stuff. That's why the regulation. So if you get a bad client, like I had, the regulation will actually protect you as well. Of course, it protects the client because it, gives them an extra layer of credibility. It, tells the client that you're not some fly-by-night cowboy just trying to rip them off. Because at the end of the day, you have got to adhere to those regulations. So, if you're not doing that, you'll go to prison, basically. So that's a good layer of protection for the client, but it also does protect you. So it's something that people overlook, but it does protect us as traders as well. Now, what type of regulation should you go for? There's different types. You've got umbrellas, you've got offshore, you've got onshore. And again, we talk about all these in the book. An umbrella is probably the most attractive. An umbrella is an established investment company, an established fund that will take you on as a trader and allow you to trade under their regulation. They'll put your name on their list, so that effectively you're a regulated member of that company, and then you can go about your business as if you're regulated individually. Okay, very useful. The fees are quite high, but they're not as high as becoming regulated yourself. It's a great tool. And again, in the book, I'll show you how to find umbrella companies. I'll offer you a few suggestions. All that's there. The next option is offshore. For example, in the Cayman Islands, you can get a fully regulated fund in the Cayman Islands, company set up for about £10,000. That's not that much money. Okay, Cayman Islands is a respected jurisdiction. It's an offshore fund, centre for hedge funds and stuff. It's a useful place. When you're regulated there as well, it's got a very good financial regulatory system. It's regarded as quite advanced. You can get that stuff fairly cheap, £15,000. It's fairly cheap considering what the industry we're in. Onshore regulation, a lot more expensive. For example, in the UK, I don't really know the US, but for the UK, for example, it's going to cost you about £15,000. Plus, you need about £150,000 as a float. So the FCA like you to have kind of backup money that's not being used for anything else. It's just in your bank account, just in case you need it. Okay, which again is a lot of money to just have hanging around, not being useful. So it's very expensive. On the face of it, it's fairly cheap, but in the end, it's actually very expensive. So that's why generally people go with umbrellas. If they want regulation in the UK, they'll go with an umbrella company rather than have their own onshore regulation, just because the costs are so high. Okay. The other option, of course, is to go offshore. But for me personally, I feel being regulated and based in London, in the UK, it's just much more credible. But of course, it's much more expensive. So it's just which way you want to go. Now, this is the most important thing. Profitable traders are much rarer than high net worth clients. There's plenty of people with money looking to invest. Traders who can make that money grow are very, very rare. Don't ever overestimate the skill of professional traders. And if you read the book, you'll see so many experiences and stories about traders that I met that are just horrendous. And it was a massive eye-opener because, I assumed that everyone in the city was just profitable and making money. That's where everyone made money. That is not the case. Professional traders, even regulated professional investment companies, do not necessarily make a profit, honestly. Okay? So you need to understand your value, and as you work your way up, you need to make sure that you appreciate that value and that you reflect that when you start taking clients on. Okay? That's very important. Okay, if you want to make money, if you want to start making money. And just to go over it, the book basically gives my own steps to finding clients. I've got a whole chapter dedicated to it. And we go through all that, the umbrella, offshore, onshore, all the options you could look at, and the pros and cons, etc. The book basically also gives you a realistic look at being a fund manager. You think to yourself, well, if I'm trading $1 million, I'm going to be made. That's not the case. There's some maths in the book. Again, from my own experience, when I first started trading $1 million account, you're not rich off $1 million. You're not a big dog, high flying private jet trader just because you're trading $1 million. It's not that glamorous. Okay. It gets glamorous when you start building on that and trading more and more. It gets very glamorous, but the process is, I think it's interesting to understand the process, to understand that it's a business. And like any business, it's very hard in the beginning, but once you grow it, the good thing about trading is there's no limit to the business. Okay. So, there's basically no cap on how much money you can make. If you think about it, the biggest funds, one of the biggest funds on the planet holds about $35 billion. Well, even if you only get a 1 billion and you set up properly, you take 2% management fee, that's 20 million a year just in your management fee. The pressure's off. You can then go about trading and making the 10, 12, 15% a month that your client's looking for. Okay. That's a different world. In the beginning, it's scrappy, it's hard. But if you set up properly, you can give yourself a much smoother path to trading multiple millions and then having a nice, sustainable, comfortable business. Okay, so they're the key themes from the book. Hope that's been a useful run through. If anyone's got any questions, I'm going to hand back over now. I don't know if, okay. So you type the questions in, that's cool. I'll keep going. What consists of being FCA regulated? So to become FCA regulated, basically, essentially, FCA regulation is basically a signal that you're adhering to certain standards. So the FCA outline a charter. The FCA set out some kind of conditions that everyone has to adhere to. And the fundamental principle is that you can't win if your client loses. That's the fundamental principle. If you win when your client loses, then the FCA are not happy. Okay, so what that means is a lot of companies, a lot of unscrupulous traders will trade for commission. So they'll do a deal with the broker, and every time they place a trade, they make $100 off commission. Okay, so they use leverage to make $100. So of course they're incentivized to just trade. They don't care if they win or lose. So the client's down 50%. And if you've had a bad experience with a managed account, you'll understand this. This will answer the question. And again, in the book, it talks about I had managed accounts in the beginning and I lost a lot of money. And I couldn't understand why the trader was so bad. That's why. Because he was just trading for commission. He was churning the account. He didn't really care. He was basically trying to make as much money as he could off the commissions before I left, basically, which he did. So the FCA regulation is designed to stop that kind of practice. So if you're regulated, you can't win when your client loses. So again, it makes the client trader experience much more mutual. So if the client wins, you win. Client loses, you should lose. That's kind of the basic principle of it. Now, in terms of cost, it's very expensive. Like if you want to go through an umbrella company, they charge like anything from £3,000 to £5,000 a month to have that cover of regulation. Because at the end of the day, if you are a cowboy, they're the ones that are going to go to prison. Okay, so it's very expensive, it's very risky. But if you haven't got 150 grand lying around, it's a better alternative. So FCA regulation is important for that reason, but that's the principle of it, basically. And also protects the client. If the client's got money in a regulated broker, and you're regulated, and that broker goes out of business or something like that, they get their money back. So it's very, very important, really. I'll never invest in a managed account by anyone that's not regulated. Okay, what kind of trading frequency is best to replicate on a big account? Longer term strategies. Because I used to be a scalper, and this is again another lesson in the book. I traded very short term, 10 pips for 10 pips. And when you're trading large size, you get slippage, you get all sorts of problems that you never even saw coming. And again, I go into them in the book. Again, if you know about them ahead of time, you can manage your trading style to suit. And that's a really important factor, really. So longer term, don't be trying to scalp. Don't try to risk 5 pips to make 10 pips and all that. Nice big stops, almost like swing trading, if that's what I think that's what it's called. That's what guys call it. Swing trading, longer term positions, that kind of stuff. How much did you start with? How much profit would you target weekly? Okay, when I'm trading my own account, I started with 0. Okay, and I'll explain it. I explain in the book how I managed to go from 0 to trading what I've got now. Okay, in my own account. And again, I think personally, it's a great there's some great little tips in there, because you think to yourself, how can you go from 0 to something? Well, it is possible. If you look in the right places and go the right path, you can do it. Okay, and that's one of the things I mentioned in the book. So I started with 0, basically. My profit target is about 5% a month. Okay, 5, 6, 7% a month. And you can do that very comfortably with no leverage. If I leveraged up, I could quite comfortably do 10, 15% a month. Okay. On small money, remember. Okay. Once you start getting to big money, my performance has dropped slightly to kind of like maybe 2% a month. That's my target. Just because, you know, to trade, to get, the more you make, the more risk you take. So it's just easier on the psychology for me. So now my kind of thing is 2%. But if I was just trading my own money with no leverage, with no one watching me, no clients to worry about, no pressure from that side, I could comfortably do 5% a month. But as it is, it's about more like 1 or 2. Which the clients are more than happy with. I'm happy, they're happy. And I make up for it because, you know, instead of trading like, you know, $1,000 on my account, I'm trading like 100,000 with all the clients' account combined. So the cash value of making 2% is more money for me. So it's fine. I'm fine with that. But, you know, my risk goes down, my performance does dip. Of course, there are exams you have to take. But that's all involved in the process. Most of it's due diligence. They just want to make sure that you're not some cowboy and, you know, you haven't got a past, you know, a criminal past, particularly in financial, you know, fraud and stuff like that. But you're an honest, trustworthy, you know, person with integrity. You do have to obviously pass an exam. It's relatively straightforward, to be fair. But yes, there are exams to pass. Where can we follow your performance? Okay, good question. First of all my performance is audited. So if anyone wants to see the audit, you can email me. Okay. You can also follow me on Barclay Hedge. They monitor my performance on Barclays as well. And of course, I also actually run a service for retail traders where I teach them how to trade. And basically part of that service is follow my every trade. So I'm there in my account. You can see in my account, you can see every trade I'm taking, how much I'm losing, how much I'm winning, every single trade. It's not just like showing the winning trades and, you know, there's a gap. Every day, open up my account so you can follow along with me step by step. So that's another option if you want to do that. Okay, guys, we've got to wrap up in 3 minutes, I've been told, so that's fine. I'll try and make it as quick as I can. In the book, you also explain the differences ECN and market makers. Yeah, all that's explained. That's in the broker section. Why you want to trade through an ECN rather than a market maker. Pretty much everything you could want, everything that I wished I'd have known is in the book, basically. So if you are interested in taking this route, I definitely recommend you read the book because it's just going to make that process so much smoother. So yeah, everything's pretty much is explained there. So I'm conscious of the time, so I'm going to let you guys, if you want to wrap that up, that's fine. And if anyone's got any questions, please feel free to contact me. You know, my website, jarrattdavis.com. You can contact me there pretty simply. You know, I'm happy to help. Okay, guys. There we go. That's my website. You can just go to the contact section. There you go. Done.
Okay, huge amounts of practical knowledge has been shared here in less than an hour. Many thanks to Jarratt Davis for being with us. Also, thank you to our audience for the great questions. If you enjoyed as much as I did listening to Jarratt, here is once again the link to his book. I will post it here on the chat. And once again, thank you, and meet you soon in our next webinar in the book series. Thank you. Bye bye. Have a great week.